Hi, good day. So welcome back to another section with us on our accounting discussion today. So in today's lesson, we are going to pick a question to explain the concept that we have been discussing on accounting equation and the transition to the double entry principle, which form the basis of recording of business transactions in the books of the account, for which we have discussed in our two-part lesson, our previous lesson. So this is how the question goes. Charles opened a shop on 1st July 20X2, and during his first month in business, the following transactions occurred. 1st July, Charles contributed 20,000 euros in cash to the business out of his private bank account. 2nd July, he opens a business bank account by transferring 18,000 euros of his cash in hand. 5th July, some premises are rented, the rent being 500 euro per quarter, payable in advance in cash. 6th July, Charles buys some second-hand shop equipment for 300 euros, paying by check. 9th July, he purchases some goods for resale for 1,000 euros, paying for them in cash. 15th July, Ceylon supplies him with 2,000 euros of goods on credit. 20th July, Charles returns 200 euros of the goods to Sidon. 23rd July, cash sales for the week amount to 1,500 euros. 26th July, Charles sells goods on credit for 1,000 to Fruitson. 28th July, Fruitson returns 500 of the goods to Charles. 31st July, Charles receives a check of 250 from Fruitson. Then the same day, 31st July, cash drawings for the month amount to 150 euros. Required. A. Enter the above transactions in Charles' ledger's account, balance of the accounts, and bring them down. The balances as at 1st August 20X2, and then extract a trial balance as at 31st July 20X2. So this is a question you have been given. So let's walk ourselves through with this and see how the recording process is undertaken. So the first thing we want to do is that you have the name of the business, which is called Charles. We just have to write that first. And then underline nicely. Then we come to the transaction. 1st July, Charles contributed 20,000, right, in cash to the business out of his private bank account. So we said that at any time there is any amount or resource being introduced into the business, we refer to that as what? Capital. Any capital coming in supposed to have what? A credit balance by recording it on the left-hand side of the T account. And the respective item that has been affected here, which is cash, is an asset. It's supposed to be what? Debited. Because we said that we debit all incoming item of assets, and then we credit what? All outgoing items of assets. So here's an incoming item. So we're going to what? Debit the cash account, and we credit what? The capital account. We are going to open an account for cash and that of what? Capital. So cash account, you have it here. Then we will have the capital account. Capital account also coming up here. So we'll have our currencies coming up. Then the year was 20X2. 20X2. So what do we do? Since Charles contributed 20,000 in cash to the business, it's a capital. So we're going to credit what? Capital in the name of what? Cash. So it was on 1st July. Okay. Then record cash as the narration. And record the amount of what? 20,000. And then when it comes to the cash account, we debit cash account in the name of what? Capital. So the same day, 1st July, we have capital. Capital, shorten it, we have here as well, 20,000. Then you record. Then we move on to the next transaction. 2nd July, he opens a business bank account by transferring 18,000 euros of his cash in hand. So what is the cash in hand here, which is now 20,000? We are going to transfer 18,000 of them to the business bank account. So we are going to open an account for the business. which is what? A bank account. A bank account. So we're going to have our bank accounts coming up here. So bank account. Bank account. So we have our currency coming up, the year too, as always. So what was the date? It was 2nd July. So that means that the cash in hand was for 20,000. He transferred 18,000 of them to the business bank account. So if an asset is going out, what do? We credit it and then we debit the respective account, which is in this case the bank account going to be debited. So we're going to have here 2nd July in the name of what? Cash. Sorry, in the name of bank. In the name of bank, and then record 18,000 coming up here. Okay, and when we come to the bank account, we will debit it as what? 2nd July, then record here as cash. We have what? 18,000, sorry. We'll have 18,000 here. We record that as well here. Right. So that is the second transaction. Let's move on to the third transaction. 5th July. Some premises are rented. The rent being €500 per quarter, payable in advance. Payable in advance. So for every quarter, they pay rent in advance because due to the space and then the environment that Charles operates, there are a lot of facilities that's not available to Charles. So there are some of them that he has hired for it. So those ones must also be paid. And they are saying that for every quarter, they paid what? 500 euros. And looking at the month that we are in July. So that means that's paid for July, August, September, because there are 4 quarters in every year, 3 months in a quarter. So you are paid for July, August, and then September. And it is paid in advance with what? Cash. That's what we have been told here. That Charles, some premises are rented, rent being 500 euros per quarter, payable in cash. So that means that has been paid, and so therefore cash is going out. So what should we do? We credit it. So we're going to have it here, July 5th. Then record in the name of what? Rent, which is what? 500. Just record that, and then you are good to go. Then we go to the rent account, we open the rent account, and then we also record that as well, the rent account. So with the rent account, as always, you will have your currency, then the date also coming up. What was the date? It was what? 5th of July, right? 5th of July. So we have it here. Here is what? Credited in the cash. So we're going to debit what? Rent in the name of cash. So we have 5th July. Then we have in here cash. The amount involved was 500. You record that and you are good to go. Then the next transaction, July 6th or 6th July. Charles buys some second-hand equipment for 300 euros, paying by check. Paying by what? Check. Paying by check. That means if you are paying by check, you paid out of the business bank account. Because check are sent or issued to the bank or sent to the bank for what? Payment or receipt, depending on what you want to use the check for. So here, since they bought the equipment with check, it's going to be affected or going to go through the bank account. So what do? Cash is going out from the bank. So we are going to what? Credit the bank account, and then we open an account for equipment, and then we debit that as well. So you are going to credit this in the name of what? Equipment. So what was the date? We were told that was on what? 6th July. 6th July. So have here 6th July, then record equipment. Just shorten it. Okay. Then the figure involved, we're told that is what? 300 euros. You just have to record that 300 euros here. And then you have to open an account for equipment. equipment. So equipment, so since equipment is an asset, it's going to have a debit balance because you have credited what? The bank account as payment. So you are going to record here to as 6 July in the name of what? Bank. And then you record 300 euros and you are good to go. Then the next transaction, July 9, he purchased some goods for resale for 1,000 euros, paying for them in cash. He purchased some goods for resale for 1,000 euros, paying for them in cash. So goods for resale, any goods bought for resale is called what? Purchases. Purchases. So you're going to open purchases account and then you open cash account. So since we paid with what? Cash of 1,000, we are going to record it at the credit side. It means cash is going out and we are receiving stocks in the form of what? Purchases. We are going to record, what was the date that we were given? It was what? 9th. So 9th of July, we have what? Purchases. And the amount involved was what? 1,000. So you get it, then open what? A purchases what? Account. Purchases account. I hope we are right. Yes. We open a purchases account. So have it here. Purchases account. Have your currencies. The year also coming up generally there. So what do we have here? Purchases, right? We have purchases here. So that means you have recorded it at the credit side. You're going to debit purchase account in the name of cash. And was on what? 9th of July. So you record here cash. The amount involved is what? 1,000. You record it and then you are good to go. Then the next item, 15th July, it goes like, Sedon supplies him with 2,000 euros of goods on credit. This was on credit. So that means that who is giving out? Sedon is the one giving out and Charles is the one receiving it. So any goods supplied by a supplier to the business, we call that as what? Purchases. It's as if we bought with cash. But here it was on credit. We will pay it later. So the account that will involve in this is going to be the purchase account and then that of what? Sedon or the supplier in this particular case. So let's take note of that. So you are going to record that one here as being a receipt, 15th of what? July. So you write in here, Seed being the supplier, I mean the Sedon being the supplier, just shorten it because of my space, and record. What was the figure involved? We're told it's 2,000, so you just have to record 2,000. And then you open an account for what? You open an account for Sedon. So let's see how that one also goes generally here. So let me have that account here. So we have Sedon account as being a supplier. We will have it here. Okay. Then we'll have our currencies coming up. We have our currencies coming up generally here. Then we have the year. So since Sedon supplied on credit, we are going to debit purchase account and we credit what? Sedon. So the same date we have 15th July in the name of what? Purchases. Let me shorten it. Okay. Then we have 2,000 coming up here. The reason why we didn't record this in the cash is because this was on credit. So we can't record this in what? Cash book. Remember, cash book record items of cash and cash equivalents like check. So cash and what? Check. That have a value. But anything credit wouldn't go into the cash book, but will go into other ledgers as we have discussed already. So that will be the idea for the 15th July transaction that occurred. So let's take note of that. Then, July 20, Charles returns 200 of the goods to Sidon. Why? When returns comes in, at any time a business returns any goods back to the supplier, the idea here is that the goods that the supplier supplied us didn't meet our expectation. The type that we want maybe was broken. There was some sort of defect in it, so we couldn't use it for the purpose that we're supposed to use. And so therefore, if there are policies that we can return it, then we'll have to return it. And that's what Charles did. He returned what? 200 euros of the goods back to Sidon. So at any time there is returns, who is the one receiving in this case? Sidon is the one going to receive the goods. So since we have his account here, we are going to record it as debit. We debit the receiver and then we credit the giver. But for the business, we are not going to record these returns in the name of Charles. We are going to have an account called return outwards or purchases returns. That means the goods that we receive from Sidon for which we are not satisfied, we are returning back to him again. An account that's going to open is called what? Purchases what? Returns, also called return outwards. So we're going to use that account to cater for this transaction. So you are going to open an account called what? Purchases what? Return. But in this case, you're supposed to record it straight in the Sidon account. So you are going to have the date. What was the date? It was 20th, right? Yes, so we have what? 20th July, 20th July, and then we have what? Say purchases returns. Purchase returns, the figure involved was what? 200. The figure involved was 200 what? Euros. So we'll have an account called purchases returns. Returns account. So PR. Purchase returns account. So we have it also coming up here. So our currencies, then the year. Since we have recorded it at the debit side of Sidon receiving it, we are going to credit it in the purchase returns account as it being given out from Charles. In the name, that stands for the Charles business. So we are going to record here 20th of what? July, and then we have what? Sidon coming up, shorten it, then we have 200 recorded here. So that is the whole idea when it comes to this return. We call it return out. So let's take note of that. Then July 23rd or 23rd July, cash sales for the week amounted to 1,500. So here we engage in sales and then was immediately paid by customers. So we received cash and then we sold some of our items that we bought for resale. So what happens here is that we are going to record cash sales, which was on 23rd of July, in the name of what? Sales. And the amount was what? 1,500. And then we go back and open an account for what? Sales. So we'll have an account for what? Sales. So sales account. Sales account. We'll have sales account coming up here. So we have our currencies. Then we have the year. Then we flow. So we have recorded it here. So as debit, that cash we are receiving, with debit incoming what? Assets. Then we credit what are going. So here, sales also coming in, but here it is an incoming. Yet we're going to record it at the credit side because sales is part of the revenue. And as per our discussion, all revenue is supposed to be credited. So we are going to credit the revenue account in that wise. So that's going to be 23rd July in the name of what? Cash. Then record what? 1,500. 1,500. 1,500. The next transaction, 26 July, Charles sells goods on credit to Frontson. So there's a customer coming up here that Charles sold goods to him. Sold goods to him. And the amount was what? 1,000 euros to Frontson. So we are going to open an account for Frontson. This is what? Sales. This one was on credit. So there are no cash payments for which Frontson will have to come and pay it back later. So we open an account for Frontson. So Frontson what? Account. Frontson account. So we have our arrows coming up here. Then we have the year. What was the date? We're told that was 26th of what? July. So since Fosun is the one receiving such goods, we are going to debit Fosun's account, and then because this is sales, we are going to credit what? Sales account. But it's on credit. So here we are going to have it here as what? 26th of July. And we have here sales. The amount involved was what? 1,000. What was the figure? We're told it's 1,000. So you just have to record 1,000. And then when we come to the sales account, since we have sold an item, it's supposed to be credited. And we have it here as well, 26th of July, in the name of what? This customer, FGX. Shorten it, okay? Then we have here as well, 1,000 coming up. So let's take note of that. Then, the next transaction, 28th. Fosun returns 500 of the goods to Charles. Fosun returns 500 of the goods to Charles. So this is also what we call what? Sales returns. So while we have purchase returns, we also have sales returns. Sales returns happens where a customer is not satisfied by the goods that the business sold to him or her. And as such, if there are policies that we should return it, then the customer will have the right to return that goods back to the business. The process involved is called what we call sales returns. So let's take note of that. So the account that will stand for the business is going to be sales returns account that we're going to use to cater for this transaction. And then we will have to also work with the customer returning such goods. So it was returned by what person? So we credit the giver and we debit the receiver. So you are going to open an account for what? Sales returns. Sales returns. Sales returns account. So XR account. What has happened here is that since Fosun is the one returning it, we're going to credit it in the name of what? Sales returns. So we have 28th of 7. Let me shorten it. Sales returns. What was the figure involved? We're told that the figure involved was what? 500 what? Euros. So we record 500 euros here, right? And then when it comes to sales returns, also called return invoice, we also record it at the debit side. We have what? 28th of 7. Then we'll have Fosun, shorten it, which is what? 500. Remember your currencies, the year, as well in that case. So that's going to be how this transaction is supposed to be recorded, and you are good to go. Then, the last but not the least, we have July 31. That's last but one. July 31, Charles received a check for 250 euros from Fosun. So Fosun, being a debtor, is now paying some of the goods that we sold to him on credit. So if Fosun is the one giving out, because we receive from him, it means that he gave out that check. We debit the receiver, we credit what? The giver. So the giver here is Fosun, we're going to credit Fosun. So we credit in the name of what? Check, which is what? The bank account. So this is going to go into the business bank account. We're going to have it here as what? 31st of what? July. Then record here as bank. The amount involved was 250. And when we come to the bank account, it records as debit, which is what? 31st of July in the name of what? Fosun, which is what? 250. Showing that he has paid some of the amount that he owes us by check. Then, the last transaction, cash drawings for the month amount to 150 euros. Amount to 150 euros. So here, Charles reduced some of the cash that he used to run the business for his private or personal use. So that means that cash as an asset is going out, and then drawings is also what? Receiving for his own personal gain. So we are going to debit drawings account and we credit what? Cash account. So what was the date? We were told that was what? 31st of July. So we write in here drawings. The amount involved was what? 150. and then you open drawings account, you reflect that. Drawings account, you reflect that. So you're going to what? Debit drawings account. So 31st of July, drawings account, the name of what? Cash, which was what? 150. So you just have to record 150. 150, and then you are good to go. And that is all for the transaction that we were given in this question.